24-hour countdown is upon us. The Fed meeting is probably going to be the most important Fed meeting we've ever seen in the history of the markets. My name is Paul Barron. Welcome back into the show. You guys are not going to want to miss this one. I do want to thank our sponsor, and that is Tangem. This is a place where you guys can get your crypto journey started. And one of the things you can do with Tangem, of course, is set it up very easy. And it's really about 3 minutes to get this thing going. Another thing that I really like about this wallet is one of the most secure ones out there. It works in conjunction with your phone. All you have to do is visit tangem.com and use our link down below. It's going to give you a little bit of a discount to get started. Let's go over to the first tweet today, and this one is a big one. JP Morgan on the Fed rate cuts. Basically what they're saying is the Fed rate cuts come in with the S&P 500 within 1% of an all-time high, actually hitting all-time high. And it results in an average return of 15% over the next 12 months. So these are good signs. According to the research, 1 month performance is more spotty. This is where stocks ending around 50% of the time, lowering 50% of the time. And then history says near-term volatility after Wednesday's rate cut will be a long-term buying opportunity. So if you're looking long-term, this may be the event for you. And other things that you got to consider right now, this is a clip that kind of gets into how long will this go in terms of a bull market? Here's Tom Lee. Take a look.
If it's mid-cycle, that kind of implies maybe third, fourth inning, maybe fifth at the latest. Is that how you see things for this rally?
Yeah, I mean, I think some parts are later cycle, like part of the Mag 7 trade. But I do think AI still has many years to just propel earnings surprise and innovation and economic growth. So I don't think it's late, like it's too late. It's not too late to buy the Mag 7. But I think the next leg of this is really the Fed cutting, helps the ISM get back above 50, brings down mortgage rates, so it's a cyclical broadening trade. And then I think, financials I think are still important because I think that they're going to re-rate more like technology stocks. Goldman and JP Morgan are basically technology companies now. And as they embrace the blockchain, they're going to become more streamlined and less employee dependent, much more AI driven. So I think there's a lot to look forward to.
All right, so very bullish signs coming out of Tom Lee. I would consider him right now the number one investor there on Wall Street. If you look at what's happening with the S&P 500, well, it's again another all-time high, above 6,600 for the first time ever. This is all happening when we're seeing a lot of pressure on the economy. Other things that are happening right there is the economy now in a recession. That's the question everybody's asking. Moody's is basically saying that it's a 48% probability of a recession in the next 12 months. This is the highest since 2020. Such a high reading has never occurred outside of an economic downturn. Right now, what we're looking at is mostly the U.S. job market, which is already showing a lot of weakness. Question mark will be, how does this turn around if we do see rate cuts coming in? Other things that you got to look at right here is the Fed will cut rates in 2 days. JP Morgan says this is an expectation. They are looking for the market to dump right before the reversal. Scenario 1, Bitcoin could dump to around 104, which would be before the reversal. Scenario 2, Bitcoin will dump towards 92. Let me know what you guys think if we're going to see those kinds of movements with Bitcoin trading around 115 early in the week. So that would be a pretty consistent or I think position that we've seen before. I don't say it's consistent, but it's definitely happened in a cycle where we've seen these Fed rate cuts before, and also some of the pressure that the Fed puts on the rest of the markets. The other thing that's kind of an outlier is the fact that we're seeing more credit crunch. And this is a good example. Searches for help with mortgage. This surpasses the 2008 housing crisis. This is huge when you look at just credit in general, but more importantly, the housing market, which means, and it goes back to my whole theory, is that this bull run is the haves versus the haves. And what I mean by that is we are not going to see retail participating in the way that we have seen it before. In this cycle, it truly may be the haves versus the haves. Here's retail sales. We're strong in August, beating forecasts. This is what gets a little weird. American consumers, especially those at the top, this is the 1%ers, the 2%ers, they're still spending, even on a lot of discretionary things, including eating outs, etc. But this could change quickly if we see an acceleration in white-collar job layoffs. And I think that might be the phase in the job portion of the economy that we are in. So if we do see that, then yes, that could be one of those major ticking points that would push over into a very, very heavy and struggling economy. Other things you got to look at is we've been in a recession. This is one analyst saying since 2024, and they've just been hiding it. I'm not saying that that is the case, but I will say that there are definitely markers. If you look at the credit delinquencies, and if you go back and watch my channel for a year, what I've been saying all along has been there are job problems. The jobs are not going to be in a good position, and now here we are a year later. And what I think has been, unfortunately, a Fed too late. Had they started in early 2025, it might have been deterred, at least the job losses. The question would be, how far back would they have started in 2024 if we weren't going to see anything like this? And remember, the Fed has a lot of room. We are at the highest interest rates we've been in a very, very long time. But these credit card delinquencies, this is a problem. And if you look at this chart right here, we're going to see numbers that we've seen since 1929. That's the kind of debt that we're talking about right now. So this is a big deal, guys. If we are looking at a recession on the outset, it is possibly more pressure on the lower side of the economy, and that starts to preclude retail from coming in. So just be aware of that. Other signs that this is happening is Klarna. They IPO'd today, and this is a buy now, pay later kind of platform, but they IPO'd at 19.7 billion. This company is one of the more, I would say, more active innovators, but right now the average user has 3.8 active loans. This is crazy for me to have 3 active loans of buy now, pay later. They're even doing this now on groceries. And when it goes to that level, I think that is a very, very big sign of what is to come. So be aware of all of that. Now, how does this play out in the bull run? How does this play out in what we will see of the Fed going in on risk assets? I think it's still positive because of the fact that we are looking at the dollar being debased right in front of our eyes. And the only way out of this is going to be through digital assets. I want to go to another clip here. This is Tom Lee talking about earnings and when they're due. Take a look.
I actually think this is a great idea, and let me explain why. First, quarterly earnings drives short-term thinking by businesses. It's a 90-day business cycle. And as you know, as clients of us, we tend to think of multi-year themes, but a company is forced to play that out every 90 days. The second is that privately held companies don't even have to report quarterly results. So it's creating a disadvantage for being publicly listed. I would say I don't know if that's what we want. We don't want private companies to say they'd rather stay private because they don't have to report earnings every 3 months. Quarterly reporting is time consuming and expensive. It consumes a lot of time for a business as the CFO sits in a room, and it takes up a lot of time for analysts. And I think it's important for people to focus on the bigger story arc. So I'm supportive of this move, actually.
All right, so that's where Tom Lee and I disagree. You look at the situation with privately held companies, most of those have investors. Those investors do expect reports. In some cases, they expect them monthly. But I think quarterly is not something that is overburdening any kind of institution, especially when you look at publicly traded institutions, which you need a lot more transparency. And that's where I think I differ, is I believe if you're publicly traded, you've got to have that transparency. That's a crypto thing going forward, whether or not we see Wall Street. Wall Street's a little bit different on how they're playing the game, but that is an issue that I'm just not on the same boat with. Other things that are going on right now is the U.S. is in talks to set up a $5 billion fund to invest in rare earth and mineral mining. The reason that's important because it could slay into what's happening on both gold and also silver. Right there, if you kind of look at the U.S. dollar and what's happening here, well, all of this is starting to slide into, guess what? Gold, which is now hitting all-time high at 3,700. And we did a video yesterday on this point, and this was how long silver has been suppressed, which it's now starting to hit around 43 bucks, which is possibly its highest price in more than 14 years. So we may be on the cusp of something very big. If you guys want to check out that video, just go over to the channel right there. We had Andy Schekman on just yesterday to talk about this because it is interesting. It has a correlation to Ethereum, but go check this video out. You'll kind of understand what I'm talking about. Let's get into a further scenario that plays into this is how high can Ethereum's price go after a Fed rate cut? If you take a look and go back to even the Iranian attack, this is back in June of this year, We saw that downward trend. And then essentially what you had since that was, let's just go to the local high. That was another 75% move. But if you go up here to a high in July and August, you had a 114% move. Now let's go from the same position of tariff day 2.0 and also an FOMC meeting and go from that low to where we are on the high, and you're talking about a 46% move. So not bad if you can tolerate these ups and downs for Ethereum. Do we get that kind of move? Because we have had 4 days leading into the FOMC meeting, which is where we are right now. Very similar to this right here, very similar to what we saw right there. So these kind of market pullbacks are healthy. It is something that has been talked about before as well. In fact, the latest ETH views from Mark Newton, he hits on it. This pullback is what we should have gotten a week ago. Don't suspect we'll undercut the prior lows around 4,200. Could get down to 44, maybe 43 by end of week. And would that pretty much kind of signify, yes, by the dips? But ETH being en route to 5,500 in mid-October. That's where Fundstrat, which is Bitminer and Tom Lee, and of course, Mark Newton on where he thinks Ethereum is going. Let me know in the comments, guys, if you think ETH is going to hit that number by mid-October. And of course, if you haven't subscribed to the show right now, just take a time and hit subscribe. It does help us out. And we're trying to become the #1 crypto show out there. So give us a little bit of love. BlackRock also bought 260 million of Bitcoin, but they also bought even more ETH. And they bought 360 million of ETH. So this is something that is starting to move in the right direction if you're an ETH holder. And also, I think in general, just rotation, because this is typical of how a lot of these kinds of, both on whether you look at traditional stock market stocks, people rotating into mid caps, or you see what's happening here in the crypto markets where we start seeing people rotate into, of course, altcoins. One other thing that I want to show you is this right here, tokenized stocks. And if you go in and look at what's happening, because what we saw is Solana kind of leading the way right here. And then right here on the 2nd of September, the explosion into ETH began. And this is just the very beginning, guys, because we did a video earlier, just showed this first level. We've already seen a couple of legs up on this. So it's very possible we could see a considerably more movement in ETH. So be on the lookout for this, because this, I think, is going to be a big deal for Ethereum in general. Going on to this, if you just take ETH on the TVL continuing to climb, a lot of people looking at locking up this. And I think most people are looking at yields as being a big factor. What we will see is this playing into more of the DAC companies, the digital asset treasuries, as a strategy going forward, playing into maybe an ETH all-time high coming very soon. And whether or not we see a $10,000 ETH or not, we are going to see a lot of yields being paid out there for sure. If you want to get a beta play, one way to go has always been Uniswap. And if you look at the L2 volume on Uniswap protocol right now, it's close to setting a new yearly all-time high. So that in itself is a good sign for Uniswap. And I think as we see the ETH ecosystem expand, Uniswap is going to be a beneficiary of that. Speaking of Uniswap, let's jump over to the chart real quick. I'm just looking at this zone. If this area holds and you reverse this back out, this could be up to another 30% retracement upward if Uniswap is the beta play on what we could see on Ethereum. So just pay attention to those things. We've got a lot moving in the markets, and I think this is going to be a very critical time as the FOMC meeting comes in tomorrow. Just as a reminder, we are doing a big live stream tomorrow for you guys. This is going to be a huge one. It's at 2:30 Eastern time. We'll most likely go on ahead of schedule, but be on the watch because this is going to be significant, whether we get the quarter basis and how Powell responds into the next potential rate cuts. His statements in that press conference are going to be critical in understanding where we are going. If you guys are not subscribed, do it right now. And if you're not in the Diamond Circle, make sure and jump in on that. That's our own private group out there. I drop an email each week. It's one that you guys want to be a part of. It's absolutely free, so use the link down below. Follow me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.